a mental health practitioner. And then I had to take some time away when I was starting a graduate program. And while I was on break, I needed some extra money, and a friend asked me to, who knew that I was really good about like paying my bills on time and I was really organized, asked me to help them with their bookkeeping for their record store. And then one thing led to another, and I started to realize how much people needed help, how uncomfortable and, you know, how shame-filled money was, no matter whether someone had access to it or not. And that I saw it as like a direct line to talking about systemic oppression, was like learning about the tax code, learning around people's numbers, bookkeeping, etc. And then I just ran with it. So really my focus is on the empowerment portion, the like taking the shame away portion, and the naming of the tax code being a kind of arm of white supremacy. I talk about that in the workshop really briefly to like lay out where I'm coming from. So really taking the time to have your own business and taking the time to learn about your numbers is an act. It's a political act. It's an act of empowerment, and it really changes your relationships. So I think it's really important to think of it that way. And it almost becomes less painful when it comes to tracking your numbers when you think of it in that larger context. So yeah, I really focus on tax preparation for small business and consulting, because I find there's the least support, but the most need. So I'd love to hear really briefly, just your name, and if you have a business, and if you know what the business is, like the structure of the business, that helps me too. And if you don't want to say anything, that's fine. And if you're not sure, that's fine too. This is just me like getting some examples I can use and understand the room. So I'll just call names out based on your thing. Catherine, please.
Hi, can you hear me? My name's Catherine Rudden, and I want to start selling art prints and photos on eBay or Etsy or some other platform. And I've wanted to do that for many, many, many years and still haven't done it. So I'm looking for a little motivation in the structure of the business side of it.
Thank you, Catherine.
Thank
Emily?
you.
I come from a fine arts background, doing a lot of acrylic, like portrait painting, but in the last 10 years, I've been in the performing arts world doing painting for scenic stuff, for theater and all that. And I've been really lately interested in public arts projects. So that's where I'm at with the grant writing and how to incorporate the tax, all of that stuff together and do better for myself, because I've had a couple of bumpy years with taxes.
We all have. Hi again, Emily.
Hi.
Evan. Hi, Evan. Evan, do you want to intro yourself? And if not, I'll move on. Okay, we'll move on. Connie?
Sorry.
Oh, go ahead, Evan.
I didn't realize I was muted. Okay. Yeah, I'm Evan Hale. I own a small classic car restoration shop, and I also do metal art, and it's set up as a LLC.
Thanks, Evan. Connie? Connie, do you want to introduce yourself and say if you have a business or not, and what the structure is?
Yeah, I'm Connie Moore. I'm Connie Moore, and I'm a professional graphic designer, and I see the need to do more things on my own rather than working for a corporation, which I've done my entire career. So I'm just looking for input on how to make that transition and what's the best way to set myself up.
Cool. Thanks, Connie. Audrey?
Hi, I come from an SEO and museum background, but I'm not like in the arts world right now, though.
You say SEO? What did you say was your background?
SEO, yeah.
Cool. Alicia or Alicia?
Yeah, Alicia, thank you. I have a couple Etsy stores and a website, so I do a couple of different things where I sell wire science art, and then I sell photography and stuff on clothing. But I'm actually a new Oregon resident, and I'm going to be kind of setting up from scratch here. And I think I should do an LLC, but I'm not totally sure. So I'm not really sure how anything works, and I have a lot of different avenues, but I think sticking under one business is good. So taxes for just one, so everything in one. Yeah.
We're going to talk about that exactly.
Oh, fabulous.
So Ashley's part, oh wait, Ashley, are you part of the organizing group or are you here as an attendee?
I'm part of the organizing group and also here as an attendee.
Okay.
I actually have an LLC as well for communications consulting. So that'll be useful for me too, to learn more about this.
Cool, thank you. On?
Hi, I go by Qua and I'm a photographer. I've been doing it for quite a while now, but I don't have an official like LLC set up or anything. And then me and my fiance want to possibly set up an art studio. She's a fine arts like painter and stuff. So eventually we want to set up a real studio.
Great. Jennifer?
Hi, I'm a creative writer and I shifted midway through 2020 from being an employee at a nonprofit to being self-employed, and I'm a teaching artist and consult with nonprofits on social justice education. And I've been considering an LLC, but I'm not sure yet.
Great, okay. I have April and then whoever is Limelight Performing Arts, and I think that that's the end. April?
Yeah, so I am an artist at heart and with a degree, but I have gone into counseling actually now. So I'm a counselor and life coach. I had an LLC. It didn't seem necessary to me, so I let it dissolve, and I'm hoping that was an okay decision. So as far as taxes, I'm just self-employed. And I have a heart for social justice, so I'm really excited to hear from Jenna, your point of view around this too.
Amazing, thank you.
Thanks.
And then I think Suzanne was Limelight before, and you changed your name. Suzanne wrote a message. Got it. Okay, great. Sounds good. Thank you, Suzanne. And then I'm going to start presenting my screen.
Hi.
Oh, sorry.
That's okay. I'm here with Tualatin Valley Create, the incubator coordinator for the Arts and Leadership Program, which I'll plug with an application information if any of you are interested. The deadline's coming up, but also this is a project that I'm working as a consultant as an independent contractor, and so I'm primarily here to learn from you. But I've worked as an independent contractor consultant for many years, so I'd like to get better at it. Thank you. And my name's Lisa. It's not up there.
Okay. Got it. Thanks, Lisa. Okay, so I'm going to start presenting. Beth, if you can help me out with the chat, that would be amazing. I don't mind being interrupted with questions. I've done this a million times. So really, I'm here to get you to ask me questions. That's like this whole dance is so that we can talk. But everything you talked about will be addressed in this workshop. I realize it's a ton of information, and I've kind of gathered this information for a decade now and tried to like hone in on the most important pieces. With that said, you will get a copy of the slideshow. You'll have access to my website. You can contact me. This is a learning process, and you're going to be learning it forever. But if you know the basics kind of never change. So once you get in habits, like I see that people get more and more confident and add complexity over time. So let's start going. And also, I have a dog. I'm not on mute. When packages get delivered, she barks, so I'll try to mute it right away. It's just dealing with being at home and working. Okay. So I already talked about this, but just kind of talking about the assumptions of walking into this workshop and what my context is for doing this work, because to talk about taxes without context is problematic. Just that everyone deserves to have resources. Capitalism is an unjust economic system, and the tax code upholds it. And that there's no right or perfect way to run your business. This idea of perfectionism is part of white supremacy, and it's meant to make people feel like you're doing it wrong. So just remember, there is no one right way, there's no one path, and we kind of figure it out as best as we can with positive intention. And intention actually does matter in IRS code, which is interesting, that if you intend and you're trying to obey the code as it's written, oftentimes you will have better outcomes, especially if it comes to audit ever, that you can show you tried from the best of your knowledge and experience to kind of follow the rules of the law. And just being a business owner and making that choice means that you're choosing to write your financial story, and that is pretty special and amazing. So good for you. That's awesome. And whether or not today you're self-employed or not, it's not to say you never will be, and it's not to say that every once in a while as a graphic designer you might not get a 1099 saying that you're self-employed, like a one-off, and then what do you do with it? Or that a friend might not have that situation come up, and you want to be able to have that conversation and help someone be like, oh, you have questions, here's a resource for you. So this is like a life skill. We should probably be learning this in school, among other things. It sounds like all of you kind of have a sense that you are a business of some kind. I think, Catherine, you were the only one that was kind of like just starting potentially. But it sounds like everybody's kind of like deciding they're intending to do work to make money and be self-employed. This comes up with creatives because sometimes people just don't know if they are a small business of some kind or a business owner. And really what we're looking for here is, are you trying to sell a service or product? Do you advertise? Do you depend on or intend to depend on the income from your craft at some point? This is just kind of trying to decide, am I even a business here? So self-employed versus an employee. What does it mean to be self-employed? So for the purposes of this class, it means that you're receiving money or earning income for your services, and this money is not being taxed when you receive it. This is different than when you work for someone else as an employee. When you're paid as an employee, your boss pays you and withholds taxes from each of your paychecks. That's why you don't receive your full hours times your wages. Instead, you have your hours times your wages less your taxes owed. So that's on a base level, that's a difference. It's one of you, it's Emily, you getting paid directly for something, for selling a piece, and no taxes have been taken out of it. We've just done a transaction and now we're self-employed. When I get paid as an employee, I get a paycheck and taxes are withheld. Now this relationship's different and the money is taxed differently. So we're all deciding that we're business owners today. That word can be a self-employed, freelancer, independent contractor. All of these words mean the same. It's being self-employed. When it comes to business structure, you all mentioned some of this. These are kind of a layout of a simple kind of look and cost for businesses based out of Oregon. Every state has different rules, so I'm only going to speak to Oregon structures and the cost of those. So you want to be mindful if you are to move, you'd want to call the Secretary of State. And I have a list step-by-step for doing this process too on the next slide. You want to call the Secretary of State and ask for some support, potentially even a lawyer, because business structure has a legal impact as well as a tax impact. Simply put, a sole proprietor is just any one of you selling a service or a product for money under your name, using your social security number. It's as simple as that. You don't have to register with anybody. It doesn't cost anything to be this. Just by nature of having that exchange of money for your product, now we're talking about potentially being a business. The sole proprietor DBA is the same, except we're adding a different name that isn't our personal name to the mix. So I'm doing business as another name. You will want to register the name with the Secretary of State so that you can keep that name. It will cost $50 every other year to re-up the registration. And at the same time, you can still use your social security number. The biggest thing is at this point, you would want to create for sure a new bank account that's associated with that DBA. So if someone were to write you a check to that business name, you could actually cash it. The next level would be the single member LLC. So tax-wise, all three of these are exactly the same. There is no difference on a tax form. You all file the exact same tax form and you're taxed the same way, whether you're a single member LLC, a sole prop, or a sole prop DBA. The only difference is legal liability. That's it, it's legal protection. So LLC stands for a limited liability company. In Oregon, it's $100 a year. And at this point, I would recommend getting an employer identification number. So that's an EIN. And that is just separate from your social security number. So when you do work, what you would do is give them your social security number, your EIN instead of your social. right? Instead of your name and your social, you give them your business name and your employer identification number. Whoops. So what I would say about that, you know, someone mentioned that they were a counselor. You know, I feel like anyone in like the mental health field or medical field in general, accountants, I would recommend that people that have liability risk, I mean, obviously you're going to have some kind of insurance. I do think having an LLC is a good idea, and it's not too cost prohibitive in Oregon. In other states, it can be a lot more expensive. So to me, I'd probably do that from the get-go. You're not doing anything wrong not having it. It's just another layer of protection for yourself and your personal assets. My clients who own homes and have small business, I usually recommend they have the LLC. Again, Oregon is a lot more affordable to do this, so it's easier to access. As far as the S corporation and partnerships, I'm not going to go too into those because those are actually much more complex. You definitely need an operating agreement. You definitely need to involve a lawyer. There's more complication. You have to file a separate tax return. Reporting requirements are more intense. So those I would definitely get some support from some kind of accountant or someone who has experience. But the cost, though, is the same. The LLC is $100 a year. An LLC can be designated as a single member. It could be a partnership LLC, or it could be an S corporation LLC. What's nice about it is, as a business owner, if you evolve over time, which many do, and they move up the kind of chain of complexity, if you establish yourself as an LLC with an employer identification number, you don't ever have to change it. You may elect to bring someone on, you may elect to be an S corporation, but you still maintain that designation, which makes things easier with like your banking. If you have any sort of like, if you're a contractor and you have a contractor license, you can just keep using that same ID. So it just makes things smoother. With that said, anything and everything can change at all times. So there's ways to dissolve a DBA and form an LLC. So there's flexibility with that. And the Secretary of State is a wonderful resource for asking those questions. And then this is just the process. So you'll have access to this, and there's hyperlinks in here. I want to just make sure there's no questions in the chat right now. No? Sounds good?
Not right now.
Okay. So yeah, you're going to want to choose a business structure, and sometimes you'll want to consult with a lawyer or a tax person. Sometimes you really don't need to. Go to the Secretary of State website. So that's where you'll start if you're going to be a DBA or an LLC. Then you go to the IRS website if you want to get an EIN number. Like I said, I suggest it if you're an LLC, otherwise not a huge deal. You will go to the IRS website, it's free. If you get redirected to pay, don't do it, it's a scam. So it's free to get an EIN. Then once you have the proof of the EIN and the proof of the business registration being accepted, because you want to make sure the name isn't already taken and there's like a search to make sure the name's okay with the Secretary of State. Once you get confirmation of both those things, you can then bring that to the bank and set up a bank account. And now the kind of circle is complete. For those, so this might not impact you all. It's dependent on zip code, whether or not you're responsible for TriMet tax or City of Portland tax. So depending on where you live, you may or may not be responsible for these taxes, but these are ones I just want to name. City of Portland does want people to register. So if you're at all responsible, depending on where you all live, you can go onto the City of Portland website and put in your zip code, and you'll be able to figure out if you're even eligible to have to pay this tax. If you don't register with them and you've been doing business, it's not the end of the world. If you are responsible for the tax, I'm going to explain it later, but it's not a huge deal. Taxes are a pay-as-you-earn system. So just remembering taxes, while we file paperwork annually, you're supposed to be considering payment all year long. Every time you earn money, there's a tax consequence. You experience that when you're an employee. Someone takes the taxes out for you and they pay it to the proper departments. But when you work for yourself, no one's doing that. So what taxes are we supposed to pay? How do we pay them? And when do we pay them? Those are the big questions.
Now we have a quick question.
Yeah.
April's asking, do I need to change my bank account that was opened when I had an LLC?
Do I need to change the, sorry, what, say it again? Do I need?
April, maybe
You want me to, yeah.
Yeah, go ahead.
So I got an LLC, used that to open a bank account, just like what you described. I've let my LLC just dissolve, but do I need to do anything with the bank around that?
Yeah, I mean, you'd probably close the account if you're not using the LLC anymore or the EIN number.
If I'm using that account as my business account, just to make it easier to separate from my personal account?
I would
Is
talk
it
to
a-
your bank and just tell them that the LLC is no longer, and see if they
Okay.
want you to set up a separate account and close that one, or if you can keep using it.
Okay, thank you.
Because technically it's dissolved, so I just wouldn't want you to have any issues.
Right. Okay, thank you.
Yeah, good question. Okay, so let's talk about taxes. What taxes do Oregon-based small business pay? And again, I speak from experience doing Portland-based work a lot, and so the surrounding areas and suburbs don't always apply to the same local taxes, but it's all dependent on your zip code. So I'm gonna name these because some of you might not live in, some of you will live in areas that you have to pay the tax, some of you won't. But federal and state income taxes, of course, you're responsible for. If you're an employee, you're responsible. As you're self-employed, you're responsible. Social Security and Medicare tax, which actually becomes what's called self-employment tax, which I'll talk about next. TriMet and City of Portland, again, those are the local ones. And then payroll tax if you have employees. It's a lot. That's a lot to be tracking, right? And no one's sending you like a welcome packet. I actually went onto the IRS website recently to see what kind of like info they had for new business owners. There are videos. They are not good. There's like someone who's an antique store owner. I mean, it's just not accessible, not comfortable. So considering how much you're responsible for, the fact that you don't have a guidebook is very problematic. So it's really, I'm hoping this will provide that for you as like a place you can go back to. So taxes for self-employed folks are more. Yes, they are. So when you work for somebody else, I use this example of $10,000 because it's a really even number. I try not to like get too in the weeds with math in this, but we need some. So if you're an employee and you make $10,000 a year from an employer, you will likely not have to pay any federal taxes at all, because if that's all the earnings you have, if you're a single person, you don't start owing income taxes until you make over $12,000. That's just the federal cutoff limit. That's the standard deduction. So you're probably not gonna have federal taxes taken out. Statewide, you will. Oregon will wanna withhold on that much money, but it will be a nominal amount. You will owe Social Security and Medicare from every paycheck you have, and it's basically 7.5 cents of every single dollar you earn is sent to Social Security and Medicare. What you're not seeing when you get paid from your employer is that they match that for you. So not only do you get paid it, but they actually match that same amount for you, which is payroll taxes, which if you hear people disputing payroll taxes are so expensive, essentially you cost your employer about 10% more as an employee than what you're paid in your paycheck. So if your total wage for the year is 10,000, you cost around 11 for unemployment, Social Security and Medicare, et cetera. With that said, this is why sometimes people are like, I would rather pay you as an independent contractor or a freelancer than pay you as an employee. I don't want to take responsibility for that. So the next side of that is what happens when you're self-employed, who's doing the Social Security and Medicare withholding? Well, it turns out you actually have to pay both those halves. So now we're talking the 7.5 cents on every dollar tax becomes 15 cents, which is significant and adds up, especially when you're not prepared for it. With that said, it's after, we don't get taxed on our money as self-employed people until after we calculate our expenses, which is great. However, that's on you. That's on our due diligence to keep really good records so that we can say, I made 10,000, but I actually spent X number of dollars, so I should only be taxed on the bottom. And so the rest of this workshop's about expenses and all those things. So we get that taxable income as low as need be for your business to succeed. But I just think it's important to name this, that there's actually a difference and it's actually more expensive to be self-employed in this way. So that's great. Yeah.
And Jenna, you may get into this, but so this is Beth with the City of Beaverton.
Yeah.
I've had artists, for example, mural artists that do a project for us, and we pay them, let's say $20,000, and that includes supplies. I know you're going to get into deductions, but have come back and said, oh my gosh, I didn't realize I needed to put money aside for taxes. Is there like a ballpark you should always put 30% aside, or?
Right. It's a great question. And, you can imagine it really depends on everybody's situation, because as an accountant, if I make money, I'm a service-based business with no office. So my overhead's very low. So that's very different than someone who makes and sells goods. because their overhead is quite high. If you're a restaurant and you have a location, right? And because taxes are after expenses, it's hard to gauge based on your total earnings because there's so much happening after that. So what I would say, safely 30% of your profit, right? Your net income that's after expenses. That's what I would say you need to save for taxes to cover Fed, state, and local. However, that implies that you actually are doing your bookkeeping, because we don't know what that net income is unless you're tracking it. So for growth, for the top of that, it's really, I can't really safely say. For like people that are service-based, I would say like probably 20% of their total earnings. And maybe if you're a maker and you're selling goods, 10 to 15 of total, but that's like a very big guess and risk to say that. So that's why I'm going to encourage you to do your books so that we can get an accurate number. But everyone asked that question for sure. So what do we mean by income for self-employed creatives? Taxable income is any form of payment for your services, whether it's in the form of cash, credit, PayPal, Square, Venmo, any of these things is taxable income. Taxable grants, there's a Regional Arts and Culture Council in Portland. They give out grants, right? Artist grants, those are all taxable unless told otherwise, which is rare. I've only known of one non-taxable grant, and it's through the Individual Development Account, which is the IDA program, which if y'all have access to it, that's like a matching grant that is offered in Oregon. And you are actually not taxed like income when you get the money. So that's like the only one I've ever heard of that does that. But all these are forms of taxable income. And whether or not you actually are given a 1099 for that earning, you still are responsible for claiming it as income and paying taxes on it. The 1099 is very important to the people issuing them. So for me as an employer or as a business owner, when I pay people, I pay a consultant $1,000 in 2020, and I'm supposed to issue them a 1099 form, which we'll talk about more later. That's for me to track that expense, and then for the contractor I have to claim it as income. Whether or not I 1099 them or not, they're still responsible because they earn that money. So again, it goes back to record keeping. I want you to keep track of everything, all the money in and money out for your business. And this real slide is really just about the language IRS uses around what's like an expense. And what they just say is like, to be deductible, a business expense has to be ordinary and necessary. What does that mean? You know, everybody's business is very different, and what you think is ordinary and necessary for your business is going to be very different than what I think is ordinary and necessary for mine. I have some kind of like really generic examples here that this woman, June Walker, who's like a great resource for a small business. I include like sprinkles of all my favorite resources in here. She's wonderful and has a lot of really affordable options for getting support around being an independent business owner, a blog, etc., written tools. So, you know, what is a ordinary and necessary business expense for an accountant is very different than for someone I talked to this morning that's making like camping food, like dehydrated camping food. For them, buying other products similar is a research expense. It's something that they need to do to test out the products. Maybe they need to go camping, go to different elevations and try out the food over so many days. That could be a business expense for them. That doesn't make sense for my business, right? So everybody's going to be different. So just remembering, what do you consider ordinary and necessary? And it also helps guide you when you're trying to justify a business expense that might seem like a little bit, probably not. Just really think about that. Steps for maximizing business expenses. This is just really like, once you kind of think of yourself as self-employed, and every time you kind of reach into your pocket for money or a debit card to like pay for something, is it business, is it personal? We got to start thinking about everything that way, because you're your best advocate in this case. Like, I don't want to quantify any of my relationships. And at the same time, I also don't want to pay tax on money that I don't have to. The more tax I pay and send out in my mind is leaving my immediate community. And I'd rather keep that money in-house. I'd rather be able to spend it close by. So the more I do to advocate for myself with my kind of bookkeeping, the more that I can kind of live that reality. And so kind of thinking about it that way instead of penny pinching about like, oh, I'll take the receipt or I'll take the receipt. It's really like, how do we just keep the money here? Define your business broadly. So some people are like, I do a lot of different things, but it's all me doing them. So maybe sometimes I consult and sometimes I teach and sometimes I make art that I sell. That all to me can fall under that umbrella business, like someone had mentioned. Like, can I just be one LLC or one business and then I do everything under there? I think as long as none of those things are wildly different, I think that's totally fine. For example, I have a client that we call a multimedia artist. That way they can fold all the things they do into one. They do things with touring music, they do zines, they do radio work, right? They do a lot of different things that brings in money here and there, but it's all under them as like a media artist. That's fine to me. If you're a plumber and an accountant, if you're a jewelry maker and a naturopath, I want those separate. We should definitely be tracking those separate. But anything else, when you feel like you can definitely fold it under like your service, your skill, your expertise, your art, I think it's fine. It's cheaper, it's easier, it's so much better for tracking. Look at your activities and review your relationships. So kind of the thing of like, if, you know, Suzanne, if you and I are friends and we end up having, you know, lunch together and I'm helping you with your accounting, so it's more like a business experience, you know, and you decide to pay, you don't have to pay for me, but say you do, keep that receipt, take it as a business expense. So like, how do we not forget that just because we have complex relationships with people that are differing levels, that there might be a business transaction? That's especially like for the studio with the fiance. Like if you all end up going into business together and say it's a partnership, you know, some people are like, well, then every meal is business because we're in business together. And I'm like, in those situations, what I would do is have a consistent business meeting. That's a dinner or something. We have a weekly meeting. We write it off. That's consistent. If you're ever audited, it's an easier sell than saying, well, every time we eat together is business. It's consistent, it's solid. So yeah, just remembering that there's an opportunity for an expense here and there. And then in the case of like, you run out of printer ink and you have to go to your friend's house because they have a printer and you really need to print something, you drive over there maybe, or take a lift over there and back, and maybe bring them some wine to thank them. Well, the travel to and from and the wine would both be business expenses.
And
Go ahead.
Jenna, did you see this question from Suzanne?
I can't see anything.
Okay, I'll read it to you.
Okay.
So everything I teach pertains to live performance.
Yeah.
At every show I attend, I am studying the performance, looking for new techniques and styles to teach my students. Can I write off the tickets to shows since I use them as an ongoing educational resource?
I think that's totally reasonable. I think like lots of my music folks, when they go see music, you know, they buy a ticket for themselves. I think that as research or education, I think is very reasonable. However, again, I'm not the auditor. So that's going to be you proving over time, this is part of my practice. A massage therapist getting a massage, a mental health practitioner getting therapy, you kind of got to participate in these activities to do them. So that totally makes sense to me. However, if you're like, I have to go to New York to see this show, that's another conversation. Did you have to go to New York? Is there any other way we could justify it? Like, is this show other places? Is kind of what the IRS would say. Like, do you have to go to New York for this performance, or is it coming to Oregon? If it's not coming to Oregon, maybe we can try to make other things happen in New York that are business forward. And we'll talk about that more with travel. Does that answer Susan's question? Susan, do you know how to do the thumbs up? On the bottom of your screens, there's like a place for reactions, and you can thumbs up me. Or there's no thumbs down, unfortunately. So I guess this works in my favor.
or Suzanne just respond on the, oh, she says yes, yes.
Great question. I'm just gonna keep rolling, ask questions if you need them. Types of expenses. These are pretty standard ones. And like I said, everybody who's a sole proprietor or single member LLC files the exact same tax form, which I'll show you later, called the Schedule C. It's just a form. It has a line for income and a line for lines for expenses. And all of the categories are supposed to be for every type of business. So we just try to force our expenses into those categories, whether they make sense to you or not. That's just what they are. There is a place on the Schedule C to add some categories. So you can kind of make some that work for you. I just steer clear of using miscellaneous or other when I'm trying to do a tax return. I want to kind of plug into what's been established. Advertising is a typical one. That's pretty standard, what you can write off for advertising. Legal and professional, that's a standard one. That could be consulting. That could be a massage practitioner, a massage therapist getting a massage. That might be under professional. Fees, so any fees associated with your business bank account would be deductible. PayPal fees, Square fees. So if you get paid via PayPal, but actually there's a fee, so you only get the difference, you get to not pay taxes on that fee, of course, right? Supplies, so that's general consumables. We'll speak to that a little more in the next slide. Office expenses, pens, paper, printer, ink. Subscriptions and dues, that's not a category on the tax return right now, but I usually add that. You can put it in office expenses too. Just be consistent year over year, but that one's typical. Creative Cloud, Dropbox, LastPass, subscription services that you need for your business. Education and research, continuing ed. So if you paid for a class like this, that would be deductible. Taking a class that you find interesting, whether it's specific to what you're doing or it's like around it because it's business related, or it's just art practice, or it's a design course, or whatever suits you, books, etc. Insurance, so any business insurance, of course. Health insurance as a self-employed person is tracked a little bit differently, so I'm not going to name it here, but it's worth keeping track of if you are self-employed for sure. Rent, so paying studio rent outside of your home. And I will talk about 1099s again later. But also we can talk about the home office later as well, because you can actually have both. Taxes and licenses, so that's the DBA, LLC, local taxes, federal, state, Social Security, Medicare. Those are all personal income taxes or personal taxes, and they are not a tax deduction for being self-employed. Just the local taxes are.
So quick question,
yes.
Jenna, you're probably going to cover documentation, but a question that just came through from Catherine was, do you need to save a physical receipt form for each thing or event you intend to write off?
I would keep, you don't have to keep a physical one, digital's fine. But I would get in the habit of saving proof of everything that you can. People always are like, I heard if it's less than X dollars, you don't have to keep it. I'm not going to say that to anybody because I don't know what the auditor is going to be like if you were ever to be audited. And the truth is, the only reason you need those receipts are in case of audit. So to do your taxes, you can keep the records, whatever makes sense to you, but you need that backup proof just in case next year you get a call, you get a letter from the IRS, you'll never get a call, you'll get a letter that says we want to know more. In 10 years of doing taxes, none of my clients have ever gotten a letter, knock on wood. So it's not very likely, but it's random. So they keep you on your toes. So I would say, yeah, I have a folder in Dropbox. I have a folder in my email that's like 2020 tax year receipts, and I just dump things in there. Definitely keep track of the ones that are, could be business, could be personal. So meals, travel, like the ones that are, why this time is it a business expense? Definitely keep those, like for sure. Utilities. I'm going to talk about that more with home office and studio rent, but you know, a percentage of your personal cell phone, a percentage of your internet at home, I think those are totally reasonable to write off as expenses as well. So this one can be really painful for people who are never going to sell goods. So I apologize right now, but it's also worthy to know about it. I talk to people about this also. It's actually less about taxes and more about your own sense of your business and whether you are pricing things appropriately. So, you know, this is really about margins. When you're a person who makes products to sell or you purchase things for resale, we've really got to be mindful of the pricing and our margins, and so, and scaling and all these things, and having a sense of this kind of dynamic of cost of goods and inventory and whatnot is really helpful internally for yourself. There are tax implications, but on the size of your businesses, I'm guessing it's going to be pretty minimal, but it's worthy to note as well. So kind of understanding cost of goods versus supplies is our first step. So for those of you who sell stuff, cost of goods differs from supplies. Supplies are tools that you use. It's things that you have around. They're for making the product that you're selling. You're not selling mallets, right? That's a supply. Unless you are a mallet making business, this is generally going to be a supply for you. Whereas if you're a wallet making company, the D rings up here will be a cost of good. They're a part of a finished product. The leather, the hardware, the string, those are all part of your cost of goods expense. Scissors would be a supply. So that's the first thing, is like, what are we talking about when we're talking about supplies or cost of goods? Here's another slide where there's numbers. Again, this will be a helpful reference point for you. So the IRS does not require you to track cost of goods and inventory when you're a business that's making less than like a few $1 million total per year. They don't really require it of you. But like I said, this isn't necessarily about taxes. This is more about your day-to-day operations and making sure you're pricing things appropriately. Beginning inventory on January 1st, if this is your first year in business, would be $0. Say you are a bag making business. You purchase $1,500 of fabric, $750 of hardware, $450 of packaging. At the end of the year, you look around your studio and you see what's left. And what's left is in the form of raw goods or it's finished product, which is really just comprised of raw goods. So I don't want to know for cost of goods what you're going to sell it for. I want to know what it costs you to have it. If you are a jeweler, sometimes it's by weight, right? We're just going to eyeball it for now. We're just going to look around and see how much stuff you have left. And in this case, it's $1,700 worth of stuff. So in order to figure out your cost of goods sold expense, we take your beginning inventory, the 0, we add all the purchases throughout the year, then we subtract what's left. The difference between what you start with and what you end with essentially is meaningful. So we have $1,000 cost of goods sold. That's all that was sold in total in the tax year. We started with nothing. We brought a bunch of stuff. We had some stuff left over. The difference between what we started with plus what we bought minus what we are left with is our cost of goods sold expense. The remaining $1,700 is taxable to us. So this kind of makes sense when you think about like when people have big closeout sales at the end of the year and they're trying to like move all those cars off the lot. They're trying to get rid of inventory. If they end with more than they started with in the beginning of the year, they have to pay taxes on that difference. So it behooves people to kind of move that stuff. If you have a low inventory, this is not going to be a huge impact on your taxes, but it will matter if you're trying to scale. And I've had clients whose business grew dramatically in a very short amount of time. And it was really essential that they had their books laid out this way and that they were thinking of things this way when it came to growing their business. So you might as well start thinking about it now. If you haven't done it before, don't worry, you're not doing anything wrong. I just want to kind of give you these ideas. Equipment, not a huge impact necessarily right off the bat, but what I will say is that when we are buying things and they're more expensive, like individual items that are more expensive, for example, a massage table, a camera, a computer, if they cost about $1,000 or more, I would say keep track of that on the equipment kind of listing that's in the spreadsheet I'm going to show you soon or in your record keeping. A bigger impact comes as you grow bigger. But you can imagine your first year in business, you might have to buy quite a bit of equipment to get off the ground. You might have to do improvements to a space that you're renting. The point of this is not to take expenses for all of these costs right off the bat. What we end up doing is writing them off over a longer period of time. So maybe a portion of it per year. For things like computer equipment, it's usually about a 5-year period we write it off. And for argument's sake, let's just say it's evenly divided. There's some like percentages and different variations for write-offs, but it's not worth going into, just the basic concept where we do a portion per year until we write off the whole item. Same thing with leasehold improvements. If you're moving into a space and updating it, there might be write-offs that you take over a longer period of time. And this has real impact depending on your situation, because I did have a client who's a print shop and they've been in business a while and they needed to buy a new printing press. And printing presses can be really expensive. And it was like a $50,000 press. And they had to take out a loan to buy that press. Well, they could have decided to take the entire expense of $50,000 in the year that they bought it. Tax-wise, that would be really nice for them. They'd probably get a refund or they wouldn't owe much because they'd have this huge expense. But moving forward, as they continue to pay off that loan, so they have like less cash on hand, they don't get to write it off anymore. It's gone in 1 year. So for them, it made sense. Even the instant gratification was not worth the 5 to 7 years, or in their case, 7 years of writing that piece of equipment off, where they're still enjoying that write-off now. So it's more about strategy. And again, it depends, scaling. If your business is relatively small, this probably won't have a huge impact, so don't stress it out or worry too much, but it's good to remember it's like something to consider. Local meals. So this is another one where people just like to ask questions about this one. I separate local and travel meals, and I'll speak to travel next slide. Local meals are, you can't be alone. It has to be business forward, like business purposes, and you will want to keep a receipt, paper, digital, whatever. You don't have to pay for the other person's food to write off an expense, but you would just keep the receipt for your portion if that's what you pay for. And I just think it's worth noting that this is, you know, you just can't be alone. You can't say I went to go have lunch and then I did work. That wouldn't be justified from an auditor's perspective. Any questions about this so far?
We have one question.
Yeah.
How do we handle the profit made from selling off a leased car that was used solely for business?
The profit made, I mean, that's not a, like, I can answer that without a tax return in front of me. Does this person do their own taxes?
Suzanne, do you want to chime in and explain? Hello, Suzanne? Do I need to unmute Suzanne?
No. What I will say about selling a vehicle that you've been writing off, I'm going to talk about vehicles later, but if you write off a piece of equipment and you sell that equipment, so you take it as an expense and then you want to sell it later, there is a tax consequence, and you do have to pay taxes on the difference between the write-off and what you sold it for. So there is a tax impact for it. It's all handled on a couple of different forms, but it's honestly something where I would ask for support in, and not like in this realm, because I would need to see someone's tax return. It's not like a simple answer, but there is a tax impact to it. So again, you sell an asset, you sell a computer that you wrote off, you sell a printing press you wrote off, you sell a vehicle that you wrote the value of it off. There will be a consequence to selling an asset, and you will have to pay taxes on it. It's not subject to Social Security and Medicare tax. It's a little bit of a cheaper tax consequence, but you still will have an impact.
Right.
Thumbs up, so we can go. Travel expenses, I mentioned, you know, if it's a trip for business purposes, so, you know, people go to like Seattle for Crafty Wonderland for a few days or something. All of the travel expenses, all of the lodging, all of, you know, convention fees, bus, train, cab, etc., baggage fees, that'll be a business deduction. The meals are a little bit different. So an out-of-town trip for me is an overnight situation. So you're gone for a full 24 hours overnight. You're allowed to opt into a per diem for meals. And the per diem is just a per day set rate for certain cities across the country and around the world. And obviously not every single place is listed there. So they usually give you like a major cities, and then they give you like a rate per day that's just an average, like a minimum. And it's usually in the US, it's around like $54, I think a day is the minimum. And the maximum is like 70 something a day that you can spend on food. And what's nice about this is that if you don't spend the per diem that's allowed per day while you're traveling, if you spend under it, you're allowed to take the per diem anyway. So you can imagine people who travel a lot, especially like musicians and stuff, if they're not spending a ton of money every single day on food, then they could just opt and take the per diem. You still need to keep track of your travel, right, to prove you were even there in the first place to allow the per diem. And it's a good idea to keep some of your food receipts in that case, just to prove that you were where you said you were, if you were to get audited. So that's a kind of like a rare thing that you could take an expense you didn't even have. That's interesting. And then I have all the like places to look it up on here. So travel when it's mixed business and personal use. I got this from Taxes for Artists. It's an Instagram that I follow. That's a really helpful, they have a lot of like helpful information that they share. So what they say is if a trip is more than 50% personal, then the travel expenses aren't deductible, but individual business expenses are. So that's like saying you go on a trip, it's a week long, you end up spending 5 days on personal and 2 days on business. What the IRS would say to you is that you can't take any of the travel costs, but if you have individual specific business expenses on those 2 days, you could write those off. So they're kind of like not letting you take a portion of the larger cost. That's what they say. That's for your own discretion when you do your taxes, but that's just so you know the rule. If the trip is flipped and it's more than 50% business, then deduct the business portion of the total travel expenses. So I'm only speaking to mixed business and personal trips. If it's all business, it's all business. So that flips it, right? So now we say 5 days business, 2 days personal. The IRS ideally wants you to do 5/7 of the airfare, the lodging, etc. I mean, to me, if you're going to New York for a week, like if you're doing a travel that's a pretty intense travel and you want a day on either end, I'm fine with you taking the whole thing as business if really you're going on a business trip. So it's all about determining it's a business trip versus personal. And then if you go abroad, as long as it's over 75% business, you should be able to deduct all the travel expenses. But abroad travel, again, the more expensive it is, the farther you're going, you want to really prove why you have to do this, why it's ordinary and necessary for your business, and why you couldn't just do it closer to home. Studio and office expenses. So of course, anything outside of the home would be a write-off. Rent, utilities, repairs, cleaning, decor, improvements, etc. That's all deductible. But also we could have an office inside the home, and most of us do now, especially. So I use the example of like a studio apartment just to show that, like, I know there's the idea that you have to have like a room with a door and it's only ever used for business, but clearly this is an example that doesn't consider the fact that our system does not allow the majority of people to have that as an option. Like, that would only mean a very small amount of people could actually write off a home office, because most people couldn't afford that. It's inaccessible. So to me, my take on that is, in a studio apartment, if we just want to do a portion of the apartment, we have a desk, we have a chair, we have a computer, we have maybe a closet that has storage in it. What I would do is take the total square footage of the studio and do a portion of that as business. And then 10% of my rent, 10% of my utilities, whatever your percentage is. Most of my clients do like 5 to 20%. You can't say the bathroom's included because I use my bathroom when I'm in the office. Well, it's a personal thing. They consider that a community space and not deductible. Same with the kitchen. So you might work from your kitchen, but you wouldn't tell an auditor that's my home office. You would say, I have an area that's separate and and this square footage. I've never heard of a home visit. I've never heard of anyone having issues with claiming a home office. I don't allow most of my clients, or at least I push back if they try to claim a larger percentage than maybe like 30%. I'm kind of like, are we sure about this? Again, I don't have any red flags to share. That's just in my mind what I'm thinking. I do have one client that claims half their space as a home office. Their business is pretty sizable, and they have basically their entire basement, which is the same size as their main floor, is a production studio. And they work in film. So to me, that's justifiable. Their entire square footage of that basement is set up as a studio, fine. But generally, I would say a smaller percentage is pretty fair. And what you can see here is, like, instead of saying we need to create business expenses, we need to spend money on things we don't need, what I'm saying is, how do we turn the things we need into business expenses? So it's just like flipping that idea a little bit. Auto. So this was mentioned, Suzanne's question mentioned this a little bit, but I'm not going to go into the details of the selling of the vehicle just because it will just be in the weeds. It's like a little bit too complex for this conversation. And it's also, it's pretty personal to your tax return. Most of my clients do the mileage deduction. Most of my clients, if they own a vehicle, this is only if you own a vehicle. If you borrow someone's, if you do Lyft or Uber, that would just be under like a travel expense, maybe like local travel. This is only if you specifically own a vehicle. You could share that vehicle, but you own it. Most of my clients do mileage off the bat. The mileage deduction is over 50 cents a mile. It changes every year, so you can just look it up. But it's a really great deduction, and it's pretty simple to keep track of it relative to actual expenses. And one of the things with actual expenses also, like Suzanne was saying, is that there's a tax consequence when you sell your vehicle. Most of my clients do the mileage. Most of my clients have mixed use business and personal vehicle. A lot of them have, like, maybe not the most fuel efficient, but more fuel efficient. I find like folks who have 100% business use of a vehicle, folks who have like a gas guzzler, a car that costs like more expensive to drive than you're really gonna get miles out of it. So like a van, a truck, etc. That's mostly business. That might be more beneficial to do that actual expense kind of path. But I'd say the majority of folks are gonna be around here. And what they really want you to do, again, it's a percentage of use. So IRS wants to see you keeping track of stuff. They want to see how many business miles you have. So if you name your home office as your primary place of business, then all the miles to and from your home would be considered your business miles and thus deductible. You wouldn't have commuting miles because your commute would be walking into your office space. So we wouldn't have to name that. Commuting's really if you go to the same place every single day. So people who have an office outside the home and they go there 5 days a week, that would be their commute, and that's never deductible for anyone. But everything else would be. So you go from there to go do errands, go to a second office, etc. That would be deductible. For the folks whose home office is their primary place of business, then it would be all the miles. And then there's personal miles. All you have to do is, go ahead.
Jenna, this is a question, and you might have just answered I don't know if you just answered this, but
okay.
One of the questions is, I have a shop on the side of my house that I operate out of. I do not have any personal cars or personal items inside. Would I still be the 30 to 50% rule?
You have a shop. It's a separate, can that person talk to me about it? Can they?
Yeah, Evan, do you want to jump on? If you need me to unmute you, let me see if I can unmute you.
Yeah, hi.
Yeah.
Yeah, my shop is completely detached from the house, and it has its own power going to it. So the expenses.
Do you own your home?
We do, yeah.
Okay, and is it a temporary or permanent structure?
It's a permanent structure.
Okay. Permanent structure should probably be part of the home office conversation. Like if it's a temporary structure, like if in theory it could be moved or whatever, then you could have it stand on its own and then also have like a home office if you want in the house too, and they would be tracked a little bit differently. Okay. But in my mind, if it's a permanent structure and part of the footprint of the entire property, then I would fold it in and have your home office, your total square footage be the whole house plus the studio. And then your home office would be the studio square footage plus anything in the house, if that makes sense.
Okay, that makes sense, yeah.
So it just depends on whether it's permanent or not permanent.
Right, okay. Thank you.
Then if it has separate power, obviously you're gonna end up splicing things together. So assuming it's the complex version, right, where it's a permanent structure and you also have an office inside the home, which a lot of people do.
Right.
But like I said, we take the whole square footage and then we find out the studio and the office inside the home, and that's where we get our proportion. Then if you have 100% of the utilities in the studio separated out that you could calculate, actually, you know what? I might consider doing the studio. This is going to be like a tax preparation kind of like people do it different. I might just do the studio as one and then the house as one. It kind of just depends on how you dealt with your property taxes. If that improvement was there when you bought the house or if you did it yourself. Like I'd probably ask more questions about that.
Okay.
Have you ever done it on your taxes before?
We did last year, but we just had someone do our taxes for us, so I'm not quite sure. No, I'm not.
Okay. So I would talk to them about it and ask them how they ended up handling it, because I can see it being run a couple of different ways, and I'd probably, as a tax preparer, do that. I definitely recommend having a tax preparer because that is a bit more complex.
Yeah. Okay. Thank you.
Yeah. So yeah, with auto, it would be figuring out our business miles is the major thing and then multiplying it by the mileage rate. And then you get a really nice deduction and it's pretty easy to track. And again, if you want to do the actual expenses and go down the path of writing off a portion of your vehicle, gas, insurance, repairs, oil, etc., you would just need to do a lot more record keeping. In my experience, it's not as beneficial in the long run. It's like tempting because you want to write off the value of the vehicle. It's limited to how much you're using it between business and personal. And also in the long run, you can't change back to miles, and miles might be way more beneficial in the long run depending on the vehicle. So if you're kind of curious about both, I would have someone help you kind of lay out the numbers for the options of both. Record keeping, we kind of talked about this. Keep your receipts, paper or digital, is totally fine. Hopefully you'll never have to look at them again because you're not going to be audited. I suggest people keep them for 7 years. Usually 3 is usually enough, but I say 7 because I'm nervous about everything. Open a business bank account. So whether or not you have a separate business name from your personal name, I would definitely open a separate account that for tracking money in and out. So, it could be 2 personal checking accounts, that's fine, but it's really nice to have it for record keeping purposes. I've found that when I've had like a side hustle that I don't do very often, it's really hard to keep track of that stuff because it's infrequent. So if I had a separate account, it was really helpful, and lots of credit unions won't charge you to have another account. So it's not like cost prohibitive. Use a calendar. Calendars are so helpful. I mean, not only for us to keep track of our day-to-day and responsibilities and appointments, but also for business purposes. So my calendar has all my whereabouts, my business meetings, etc. So it works as corroborative evidence. If you ever get audited, you could be like, this is when I went to San Diego for this business thing these days. This is why I have receipts. This is why I wrote it off. And tools like spreadsheets, Mile IQ for tracking miles, QuickBooks, there's free ones and there's things you pay for. Those tools are helpful. To me, bookkeeping is more important about you. Like, what's your preference? Are you a paper person? Wonderful, do it on paper. Do you want to try a spreadsheet? Cool, it's free, give it a shot. Are you just really into software and learning that language? Wonderful, that's where you go. I wouldn't recommend software right off the bat unless your business has like a bunch of transactions right away, just because I want you to understand bookkeeping and what it's about before jumping to software. It's like you skip a step, and that step can be really important. And so here I have a spreadsheet. I'm gonna see if I can interact with it. I've never tried to do this before, actually, in a workshop. So can you all see this spreadsheet that has numbers in it right now? Yeah, okay, cool. By the way, Catherine, you're basically, I'm doing this whole thing for you because you're the only person who's like live on the camera. So I'm just talking to you right now, so thank you. So yeah, every single page is a month of the year here. And then the last one, this last tab, is actually a profit and loss for every single month of the year, and then it totals at the end for you. So all these equations are embedded in the spreadsheet. And so if we go to January, I started entering things this morning. It was the person I talked to who was making camping food. So I said, January 2nd, 2021, I put in the description of the transaction. They paid for an Instagram ad. Then I put in the cost in the advertising column. January 10th, they sold 10 packets of food for $90. I put it in the income column. So every single line is its own transaction. So you can enter as many as you want. If you just want to do your income monthly and you want to just dump a whole number in there because you don't want to deal with all the data entry, that's fine. The most information you're going to get from the spreadsheet is monthly anyway. And also, it's going to give us a breakdown of all these expenses we talked about today. And there's also a blank column. So if you want to add something that makes sense to you here, you just have to enter it on every single sheet all the way through. But what's going to happen is it's going to add these numbers up. And if you do it every month of the year, we're going to have a profit and loss, money in and money out, and what our profit is, our net income. And that's where we figure out 30% for taxes. If you have no profit or it's negative, you're not going to owe taxes. So that's easy. This is a free resource. I have it, the link is going to be on the slideshow, so you can download it whenever you want, and you can do it every year. You could do it in Google, you could do it as an Excel. I think you can bring it into numbers if that's how you're doing spreadsheets and stuff. And I find it really helpful. There's also a mileage log mentioned here, but it's not really much of it's not that complex. It's just date, where you went and why, and miles to and from wherever you're going. So, but I have clients that love using this, and even clients that I think are ready to move on to software and they just really like using this tool. So great. Just make sure you save your changes if you're doing it in Excel. Okay, so let me get back to here. So the profit and loss, so we saw this earlier. It's a list of income and expense categories and the amounts earned or spent. For the short term, it's going to track your profit margin so you can tell if you're charging the right amount for your services or goods. And for the long term, it's going to help with tax prep, retirement savings, and planning for your future. What's nice about it too is, you know, folks that I work with that are able to track their money in and out on the regular, we are able to plan for them. So taxes are never a surprise for them, because I already know their numbers like around now, even earlier in the year, and I'm able to like kind of run some estimates to see where they're going to be at for tax time. So it's no surprise. Because again, like I said, taxes are a pay-as-you-go system. We file taxes once a year, but we're supposed to be tracking and paying them throughout the year. And when you file the tax paperwork, that's when we resolve, did you pay too much or pay too little? So that's what that cycle is really like. Any questions? No? You guys are doing great. This is what the Schedule C looks like. This is just like a pop out image of it. It's basically your income and your expense categories. That's all it is. That's what the tax form is. That's what the sole prop and the single member LLC all dump their information onto. And it's just limited categories. So tying up loose ends. I talked about issuing a 1099 miscellaneous. I believe they're changing the name of this. They're going to make a new form just for non-employee compensation. That's for paying people for their service. So the 1099 NEC. So that's really not exciting at all, totally unnecessary, but that's what they're doing. The rules are still the same. So if you hire someone to help you as a contractor, the first thing you should probably do is give them a form W-9, which I have a link to here. The W-9, they are going to put their name or their business name, their social or their EIN. They're going to sign it and date it, and they give you their address. You take that form when you are going to pay them. You pay them throughout the year. You add up how much you pay them for the whole year. If it's $600 or more annually, you're technically responsible for issuing them a 1099 in January, by January 31st of 2021. So that's for the 2020 tax year. When you do your 1099s, when you prepare them, you do them all at the same time. There's a process for it. It's not the kind of thing you can just print a PDF of the 1099 form off the internet. The IRS is very particular. It's on this carbon paper. There's a red copy. There's carbon print. So if you want to do the 1099s and you want to order the paper, you would do it now directly from the IRS. I don't know how long it's going to take. You can buy it from like Office Depot. You used to be able to get it for free at the library, at the IRS office, but I don't really know right now because things are in and out of closing. You can also, there's a lot of services online that you could do it relatively cheaply and get the copy to your contractor, but also you have to send a certain form of that copy to the IRS in Oregon. There's a process for it. It's overly complicated, but it's accessible. And I have more instructions on my website because I'm not going to be able to do the whole thing here right now. Also remember that if you're paying rent for a studio space or for an office, you're supposed to 1099 your landlord as well as part of that process for the rent paid. So this is, to me, really about relationships. Like when you're working with someone, make sure you decide what that relationship is right off the bat. So if Alicia and I are doing a project together and I'm the one who gets paid for it, so I get paid the $2,000 for our project, and then her part of it is $1,000. I don't want to pay taxes on $2,000 because I'm giving her $1,000. So what I'm supposed to do is make a 1099 form and give it to Alicia at the beginning of the year that says I gave her $1,000, and then when she does her taxes, she claims that $1,000 as income. I get to take the $1,000 as an expense. It's like hot potato for the money. The IRS is just really strict about it. Have a lot of my clients not done it? Yes. Have they had any issues? No. Could they? Sure. It's another thing where we're like, audit lottery. I don't know. Beth, did you want to say something?
Yeah, so we have one question.
Yes.
In 2020, I only paid rent on an office for 3 months. Do I need to file a 1099 with them?
Technically you should, but also if you feel like you can't because of the relationship or something, don't worry about it. It's like you're supposed to do this paperwork because the IRS wants to make sure that the landlord is claiming that money as income as well. And the 1099 guarantees that the IRS knows that it happened. Any form like that, 1099, W-2, 1098, that means the IRS has a copy of it. So they're going to expect that from that landlord. Again, realistically, if you feel any sort of fear around 1099ing your landlord because they're acting weird about it, I don't want you to put yourself in jeopardy or at risk of losing a space. Just keep track that you tried to ask. And again, you said you were there for 3 months. I'm not worried about it. You could probably just move ahead and write it off as rent, but I would just try to keep these rules in mind moving forward. It's a good habit to be in. So it's like, you can always take the expense. It's just more like if anyone pushed back on you, again, I've never seen anyone have that issue, but if they did, what would you say? And what's the worst that's going to happen? Probably not much. For 3 months of rent, I'm not worried about it.
Yeah, so Jenna, this is Beth, and I think one of the things that people don't realize is that so tell me if I'm wrong, but the IRS isn't going to kill you if they have questions. And, you know, you might, yeah, they're going to come back to you with questions. But if you screw up or you make a mistake, they're going to come back to you and ask for more information, right? I mean, it's not like
There's
I
like
mean,
a whole situation that happens.
yeah,
Like,
people fear
Yeah.
it, but like, you know, a lot of times it's just about providing more information, right?
yeah. Yeah. I mean, it's a great question. It is so fear-based. Again, remember, I said it's a product of capitalism and white supremacy. How do these things operate? Fear. It's not, hey, you started a business, Evan. Welcome to the world of being a business owner. Here's all the things you need to do. Let us know how we can help you. Let us know what will make this easier. It's like, you did it wrong. Now you owe penalties. Here's the letter. We're not going to explain it. The language we use is completely inaccessible. So yes, there's a long process of letters and responding and talking that happens before there's any real action. And I actually had that happen to me before I learned taxes, where I got into a bad situation with the IRS that was all a miscommunication, but in the end, they froze my bank account. It took a long time for it to happen. It was due, and a lot of reason, to miscommunication with the person who I asked to help me with it. So I had an issue with the IRS. I didn't understand it. It was basically like, I always just had a paycheck job. And then I got a situation where I got some stocks. I had no idea what to do with them. So I went to like Liberty or Jackson Hewitt at the Fred Meyer, went there, had them do my taxes, and they did it wrong. And I got a letter saying I owed like $1,000. And I was like, I don't think that's real. I mean, if I do, I'll do it, but I don't think that's right. But I didn't understand it. And then I thought I did something wrong. So I didn't even go ask them for help because I was so in a shame spiral. And then I started getting letters. And so I like called someone in my family. I was like, hey, does anybody know anybody I can ask for help? Because at the time I had no idea. And I was like, well, I chose someone to help me and now it's wrong. Do you all know anyone? So my dad was like, yeah, I just sent it to this guy. So I sent it to this guy. He didn't do anything. I faxed him letters like every couple of weeks for a really long time. And clearly he didn't do anything, and he didn't talk to the IRS because then one day my bank account was frozen. So that's because there was no communication. When you ignore them, that's a real problem. Not paying them is not even the big problem. It's ignoring them. And you can see that with the penalties they assess for not filing your taxes versus not paying. The penalties are much higher if you don't file versus not paying, because they'll work with you. Oregon's a little more aggressive, honestly, but they also will work with you. So what happened was my bank account got frozen. That kind of catapulted me also into wanting to learn tax, because I was like, wow, I still can go to my home. I still have community that will make sure I can eat. All of my privileges were like very on the surface of like, if this happened to somebody in a more vulnerable position, this could be the thing that starts them being on the street, losing their health care, not being able to feed someone, whatever the case is. You know, that is so problematic. It was a miscommunication. In the end, I learned to do my taxes and fixed it and got money back. So
yeah, it's a great point. I mean, I think generally speaking, the IRS wants to work with you. I mean,
yes,
you obviously don't engage in fraud, right? But realize that if this is weird and scary, yeah, I'm not saying they're super helpful, but just like do the best you can and make it get the documentation that you need, and yeah, do the best you can, and you'll probably be okay.
Well, and barring gross negligence, like barring you just like not claiming the $50,000 1099 you got, and even then they're going to send you a letter saying, hey, this information's missing and you can fix it, but there might be penalties, but you can fix it. Like if you claim a $500 plane ticket that you get audited, which is already very unlikely. In the audit, they're like, you can't take this $500 expense. They're just going to make you pay taxes on it and some penalties, but it's not going to be like now you owe $20,000, because it doesn't make any sense, right? And like, I know rarely punishments fit crimes, but this is a situation where it kind of does. Like the way that you don't abide by the tax code, the punishment is very fitting to that. And there's, like I said, plenty of time between any action being actually taking place with the IRS. They have a process they have to adhere to, and if they don't, then they're in the wrong. So yeah, I talk about getting letters though later. It's a great question, Beth. I already talked about the filing taxes versus paying taxes, then just that filing it is an annual thing. Generally, it's April 15th that the taxes are due. For partnerships and S corporations, it's actually March 15th. They file their taxes a month before personal, because when they file their taxes, they create forms that individual owners need to file their personal taxes. So it's just a paperwork thing. 6-month extension, anyone can file. They don't get rejected. I've never seen that happen before. You just file this form. It's called a 4868, I believe. And you file it by April 15th, and then you have 6 months to file, but you don't have 6 months to pay. Taxes are still always due by April 15th. Paying taxes, it's a pay-as-you-earn system. So we already talked about that. The system really is a quarterly system. So the expectation is that every few months, essentially, that you'll be paying into the system. And that's what's happening for you as an employee. You just don't know it because your employer is taking care of it. So I just kept this up because 2020 was totally not the schedule that we've ever had before. So I'm just giving you like the regular schedule. So really what the expectation is for the 2019 tax year. So we're talking 2019, April 15th, 2019 was when the first quarter was due, which is also the due date for the 2018 taxes, like the end moment to file your taxes. So those fall on the same day, because really that's the day the IRS wants you to start paying for the next year. They don't want you catching up for the prior one. So even if you look at the schedule, it starts to make sense as this pay as you earn system versus like paying after the fact, which is how most people act. April 15th is your first quarter's due, June 15th is the second, then September, then January of the following year. That's usually the schedule every year barring COVID, right? That was the first time this has ever changed in my history of doing taxes. Sometimes tax day changes if it falls on a weekend or a holiday, but generally there's never been a change like it has the last year. There are, you can pay online, you can pay with mailing in a voucher, and I have all the access points for you for the federal and the state. There could be some late fees if you miss payments. They're pretty minimal. To me, like estimated payments are a personal choice. I didn't pay any this year. I know I'm gonna owe. I know I'll have some penalties for not paying. The penalties are not so problematic for me that it's not worth spending the money during a time when money is so vulnerable. So I would rather you not pay these taxes and have to wait to get money back potentially. Or just even, I'd rather your line of credit be with the IRS than your credit card company, who is way more predatory, or you not have money for groceries. So I really think of these always contextually. Like, yes, it's ideal. You prepay the taxes so that you're caught up and you break even at the end of the year, wonderful. But realistically, we really want to make sure that y'all don't send money to the IRS and then you can't get it back for a long time. Local taxes for small businesses, I mentioned TriMet and City of Portland. So if you're in the TriMet district or Lane County district, Lane County is the other district that falls under TriMet. If you made that same $10,000 I've been talking about the whole time, it's a $73 tax. So it's a very small percentage of your business profit. We basically take your profit minus $400. That's just this exclusion that they have. And then we multiply it by this. That's it. And then the next year, so if you pay that in 2020, in 2021, we'll write it off as a business expense for the 2020 tax year. City of Portland tax, I mentioned, that is on gross sales. If you make $50,000 or more, you're going to owe $200 to them. It'll also be a write-off. The City of Portland loves sending like letters. They love saying that you missed a payment. They love saying that you owe a presumptive tax. And the presumptive tax also, it's not like they're saying a presumptive tax of $200, which is basically the minimum amount you're going to owe. And most small businesses, that's what they'll owe. They say it's like $800, which to me is very problematic because that is not in line with anything you'd ever owe at that level of business. I've talked to them about it multiple times because I think it's really problematic and people end up paying it out of fear. So that leads me to the next slide, which is like, what happens if you get a letter about your taxes? Don't hide it. Don't rip it up. Don't send the money. Open it, read it, ask for help, call the number, get support. There's also a scam that's like related to LLCs. So when you register as an LLC, like I said, it's $100 a year in Oregon. There's this scam that's a letter that goes out this time of year, every year, where it's a $185 bill and it's saying like, for your annual registration. But if you read the fine print, it says it has no association to the Secretary of State. So it's just like someone trying to make money off of people not understanding or being scared. So $100 a year is the only amount. 185 is not real. Again, it takes asking someone that. Look it up online, look it up on Reddit, Google, whatever. And oftentimes you'll find that these things are scams. I do that too for myself. I got like a trademark thing for our new business. I got some kind of like legal nonsense for my new business name, so I don't have to ever change it. And I got some letter in the mail. I was like, what is this? So I just looked it up and it was like, oh, this is a scam.
Okay. So Jenna, we have people confirming that they are also getting these inappropriate messages, but also I have a question from April. In 2020, I only paid rent on an office for 3 months. Do I need to file a 1099 with them?
We talked about that. We already hit that up. Technically,
Okay.
It's supposed to. I don't think it's a really big deal, especially this year. I think anything's going to go. So don't worry about it.
Got it. Okay. Thank you.
Yes, the letters, I know. So open them, look at them, like do some research on them, and then ask for help from someone who might know. And there's also free services as well, like tax support and whatnot. Finding a tax person or bookkeeper, ask around. You don't need a CPA, especially in Oregon. Oregon has the most restrictive licensing requirements in all of the US, and actually kind of like the only licensing, like educational requirements. California has like a little bit, but Oregon has classes we have to take, 30 hours of education every year. Like it's really intensive. So you're going to get licensed tax preparers who have a very robust knowledge of the law and who actually are aware of small business. CPAs have such a broad knowledge, and it's so complex that oftentimes they don't cater to small business, and their prices don't cater to small business. So just so you know, a CPA is not necessary for you. Ask around, ask for people you know, ask for referrals from other places. If someone makes you uncomfortable who's an accountant that you've met, don't work with them. Like, just because someone's quote unquote a professional doesn't mean that they have all the power in the relationship. You hire them, you get to have the power as well. And if you don't like the way they talk to you, do not let someone treat you badly just because they say they're a CPA. There's free and low cost services for small business, Cash Oregon, Livelihood Northwest. Obviously there's going to be some kind of support through Tualatin Valley Creates. Like there's going to be any place where you're gathering small business people, there will be resources for small business people. So just take advantage of that. And then just for being mindful, I don't know how many of you got any of the business resources through the SBA this year, like the PPP or the EIDL funds. I'm happy to talk about those things too, because it's 2:30 and we still have some time. This is the end of my workshop. We flew through. So if people just want to ask me questions, I actually have some slides about the PPP and EIDL that I could present as well for a different workshop, but I'm happy to talk about that if that's applicable to you all. But I really just wanted to get across with this slide is like, go get what's out there. Like I wrote this up in March when all of that money started happening. It was like pandemic unemployment assistance, paycheck protection program, EIDL, grants, local grants. And I was like, everybody just apply for everything and get whatever you can, and then we'll figure it out later. Especially because of how volatile the economy is. Like, just because right now you're fine, that doesn't mean in 6 months you're gonna be, or in 2 years. And so if you can get a $20,000 loan like the EIDL for 3.75% interest for 30 years, to me, the peace of mind is worth it. And whether or not I need the money right now doesn't matter to me, because my community might need it. Like, we have to start thinking beyond ourselves as individual business owners. It takes all of us to do this together. And if there's money out there, please go get it and we'll figure out the details later. I'm not saying to do with predatory things though. The SBA is very different than like going to Amex and taking them up on some offer. So do we want to talk about those things at all? Because that's it.
Yeah, so I have a couple questions here. I did get an SBA, if you can dive a little into that. And then another question, I have a question about the SBA loan that was done recently because of COVID.
So I think everybody needs to be more specific about what SBA thing they're talking about. So the people that wrote those questions, if they could unmute and talk to me what they got.
Yeah, April and Evan, yeah.
This is April. So I get confused with the names.
Okay.
But it was one of the things for COVID, and it was a loan that had an advance with it.
Yep. So did you get the $1,000 cash advance?
I got that.
Okay, and then
And
you
then
probably got
I
the
got
loan with the
a loan
30
as well.
months. How much did you get for the loan, if you don't mind me asking?
1,100.
Okay, so you got a $1,000 cash advance plus the $1,100 loan.
Right.
Okay, great.
And I've been trying to get a hold of someone in through the government to find out when do I start paying it back, when, you know, I can't get information about it.
Well, it should say that stuff in your loan agreement that you signed. So the $1,000 you don't have to pay back. The cash advance, you don't have to pay back. You do have to pay taxes on it. It's like considered business income. But the $1,100 in your loan documentation, whoever issued that money to you would say when you're expected to start paying it back. It's usually based on when you got it. There's so many months before you have to start paying it back. And I think they want you to hold on to it for like a year or something. Like, I know they want to get 1 year's worth of interest on you.
Well,
right.
And of course, you know, I would prefer not to pay interest, but, well, I didn't have paper, so it was all done digitally, and it was done through Umpqua Bank, but then when I called them to ask them, the person couldn't answer my questions. They said, call the SBA, and the SBA is not really giving me clear information.
Interesting.
Maybe this will take longer.
See, that's the thing, though. I don't think that you would get, I don't know if it's the EIDL loan because Umpqua wouldn't issue, I thought those would be issued directly from the SBA. I'm going to look it up.
Okay.
And then, Evan, what did you get? I think you're on mute.
Well, it was actually me.
Oh, sorry.
Yeah, I did get an SBA for about $5,500.
Do you know which one?
Off the top of my head, I can't quite remember. It was a loan that I believe I have to pay back over the course of a whole lot of years. There was a whole long time to pay it back, and no interest for the first year.
Right.
So after 1 year, it will be a low interest.
Yeah, that's the EIDL. That's the 3.75% interest over 30 years. So yes, there you go.
Right. I was gonna say 30 years. Yeah.
So you said you got.
I got.
Yes, so it sounds like the same. So you said you got the EIDL loan, and then what you're clear about is that the first 12 months you don't have to pay it, don't have any interest.
Yeah.
Once you start paying it back, the interest starts accruing. But again, on an $1,100 loan, it's going to be very like 3.75% just on an $1,100 loan is nothing.
Yeah.
So if there's any way to use that money to make more than that, it might be worth it, you know? So in Emily's case though, you said, did you get the PPP as well?
I did not.
Okay.
I used it more for, to offset the losses on contractual work.
But you didn't get the PPP. You just got the EIDL. Did you get the advance and the loan?
I can't quite remember off the top of my head.
Well, the advance would have been $1,000. That would have just come into your account. Okay, so it sounds like you just got the EIDL loan. That's it.
Yeah, I guess so.
Okay. Well, if the PPP comes around again, and if you're eligible, it's worth getting that one because it will be forgiven very likely.
Mm-hmm.
And that's the loan that I think they might release another round of it. You could only get it if you had profit in 2019. And profit that was more than like $12,000. Like you kind of need enough profit for them to issue the loan to you. But it was
I'm right on that line right now.
Yeah, PPP is the Paycheck Protection Program.
Okay.
So yeah, I would say a lot of banks weren't giving it to people under a certain amount, but basically they take 2.5 times your monthly profit. So they take your net income for the year based on your Schedule C. I showed you that form, whatever the bottom line is. They took that, divided it by 12 months and multiply it by 2.5. And then that's how they establish how much you get for it. And there's an application process, and these go through banks. Generally, like a lot of credit unions were helping issue them in larger banks as well. And then that one, though, it has the potential to be forgiven. And there's a tax consequence to it, but it's not worth getting too into it if it doesn't apply to anybody right now.
Yeah, and I think I was writing that line because I did have a mixed income where I got about half my income from W-2 and half from 1099.
Right.
And
right.
so combined, it was kind of messy. And as far as like furlough, unemployment, all that.
Yeah. Well, you just might have not had enough profit to get the loan, to get it.
Yeah, that could be.
That's probably what happened, because it wouldn't impact your wages, and unemployment had nothing to do with it. It literally had to do with your 2019 Schedule C. That's it. So whatever you filed on your taxes in 2019 would dictate what you were eligible for.
And that's a little like, whoop.
Yeah. So it just depends on what was on your taxes in 2019.
Okay.
Just that Schedule C form, just the form that showed your income and your expenses for your business. That form was the only thing that mattered to them when giving you that PPP.
Okay.
So yeah, so I feel like I think it was April who had it. And I think that probably answers your question, April, that you have a year of no interest accruing to pay it back.
And this is Beth. Jenna, you're gonna share those spreadsheets, right? So we can email the spreadsheet out to the group, right, that signed up for this class?
Yeah, the link is actually embedded in the slideshow. So if you have the slideshow to share, which I think I shared it with you, didn't I? You could share the entire slideshow with the group.
Great, yes.
So let me make sure. I thought I shared it with you, but maybe not. Oh yeah, I did. I shared the slideshow with you. So you have it, and it has the link to the spreadsheet in there.
Perfect, thank you.
Yeah. Other questions that people want to ask, because we still have a little more time? No?
I do. This is like way back to slide 1.
Yeah.
I think. I've always wondered when I should make that jump from just being like the most simple sole proprietor to anything beyond that, I guess. Like at what point do you make things more, I don't know, in my head it's kind of like more complicated. So like keep it as simple as I can for as long.
Well, like I said, the sole proprietor and the single member LLC are the same tax-wise.
Okay.
There's no difference. The difference is legal liability, which I don't know how risky what you're doing is. So I would say if you buy a home, then I would want you to be an LLC for some separation between business and personal.
Okay.
I would say your record keeping doesn't have to change, but I would definitely want to make sure you have a separate bank account if you do the LLC.
Okay.
And then it's $100 a year, but it doesn't make you any more of a business to do it. Like you could be your name doing it for, also if you don't want to use your personal social security number, I would say, I mean, you could get an EIN right now with your name attached to it. But that's another like jump for me, is like just separating business and personal out.
Okay. Okay. That makes sense. Thank you.
Yeah, of course. Student loan stuff. I don't have anything about student loans, but I do know some people that this person, well, there's organizations that deal with like student loan debt kind of stuff and like consolidating debt and things like that. But my friend's business is called PDX Money Coach, and I'm putting that in the chat. Her name is Emily Gowan. And she's wonderful, and she does a lot of like personal, like money coaching stuff. And I know she does stuff around student loan support, but a lot of nonprofits do too. Like there's a lot of like nonprofits, like MISO is the Micro Enterprise Services of Oregon. They are located in Portland, but they also might have an office, I think, in Beaverton actually. And they, I know, do some like debt relief, and they help people like build up their credit by, you know, doing short-term loans and things to help get your credit up. So I think they do student loan stuff as well. Yeah, the only time I ever touched on student loans really was during the beginning of the pandemic, when there was a lot of like freezing of student loan repayment. So I was researching it a lot, but only in that context. Cool. I mean, I do know there's income-based repayment too. So if you're, you know, if your income's going to change dramatically and you can't make the same level of payment, my assumption would be that you would just update them about your income change and they would adjust your repayment accordingly. So that's the only other thing that I ever deal with tax-wise.
So, Jana, this is Beth again. Can you just put your contact information again in the chat and your website? So if anyone has follow-up questions, they can contact you.
Yeah, and it's all on the slideshow too, all this stuff.
And perfect. And we recorded this session. So I know this was a ton of information in one bite, but we can send out the recording again if people want to review it.
Yeah, I would love it too, because I love having these on record, because if people are okay with it, I like to share it with people when they ask me for help, because sometimes like this is so much information. So for people to be able to watch the slideshow, if I can't present it, it's like such a huge help.
Perfect. Yes, thank you. We will send it out.
Cool.
And Jenna, are you okay then if we email you if we have questions still?
Yeah, I mean, my only request is like one email with your 5 questions as opposed to 5 emails with 1 question each.
Okay.
Yeah, and please ask me questions. If I can't get to it, I might refer you to someone else, but yes, feel free to.
Okay, thanks.
Yeah. Cool. So nice. Thank you so much. And Catherine, thanks for being on camera the whole time, because otherwise it makes me feel really weird to talk to myself. I appreciate it. Have a good day, y'all. Beth, thank you for picking this up.
Jenna, seriously, you are so empowering. And I truly think that you're empowering people in a way they've never been empowered before. So thank you. We will follow up with people with the recording, with the PowerPoint, and if you have questions, we'll connect you to Jenna. Thank you so much for joining us. And you know what? Have a happy Thanksgiving. But we have so much to be thankful for even in the midst of a pandemic. So thank you so much, everyone.
Safe. Thank you all. Everybody stay safe. Take care of yourselves. And
yes. Stay safe. Be healthy. Okay. Bye. Good to see you.
Thank you.
Bye. Thank you.